Greetings, members one and all of the Salivation Nation. Gold is suffering more losses. This is the fourth loss in 5 sessions, and we'll explore some of the reasons why, and also that palladium continues to hit record highs. Let's check this out. This comes to us from MarketWatch. Gold prices on Tuesday finished lower, suffering their fourth loss in 5 sessions, as upbeat reports from some of the U.S.'s largest banks muted signs of inflation and continued progress towards a Sino-American trade pact dulled demand for haven-related assets. Gold prices are getting dragged down as trade tensions have eased in the short term, and as U.S. earnings season gets off to a great start, said Edward Moya, senior market analyst at Oanda, wrote in a Tuesday research note. The banks are painting a picture that the U.S. consumer remains strong, and that should support fresh record highs with U.S. stocks, he said. At least that is the case with the U.S.'s biggest bank, J.P. Morgan Chase and Company and Citigroup, which both exceeded analyst consensus estimates for profits and sales in the last 3 months of 2019, helping to bolster optimism that has helped to lift U.S. stocks to records and weighed on gold and government bonds. And I'll just say, I'll pause right here and say how wrong I was in thinking that the gold and silver prices would hold at certain floors. They've bust through those floors now. In fact, we'll take a look here. You may remember that I made a prediction that through this week, we were going to see gold stay at the bottom of 1550 with maybe a little bit of dip here and there below. And same thing with silver below 18. It was highly unlikely it would get below that. Well, it looks like both of them have suffered here, and silver especially is well below that $18 level. And gold is below the 1550 level. Now, not by much. Gold could recover that and go up over. In fact, we'll see what happens with the actual signing of the Phase 1 trade deal tomorrow. But look at the platinum group metals. All of them up tremendously, especially rhodium is on fire. $7,850 an ounce for rhodium. Man. And palladium is up $43, breaking records again, $2,177, and platinum is up $9. Let's get back into this analysis here by MarketWatch. Gold for February delivery in COMEX lost $6 or 0.4% to settle at 1544.6 an ounce for a second straight session and marked the lowest finish for our most active contract since January the 2nd. FactSet data show prices have now posted declines in 4 out of the 5 last sessions. March silver lost 25.4 cents or 1.4% to $17.74 an ounce, following a 0.6 decline in the previous session. Silver gets hammered compared to gold. And it seems like nowadays we're seeing a new normal arise where, yes, silver is more volatile, but it's volatile to the downside as opposed to the upside. And it's just not able to break through for some reason. So the Consumer Price Index rose 0.2% last month. The Labor Department said Tuesday economists polled by MarketWatch had forecasts of 0.3% advance. Meanwhile, the increase in the cost of living in the past 12 months rose a few ticks to 2.3%. So that's a little bit more than what the target is for the Federal Reserve, matching the highest level since October 2018. But price pressures more broadly remain largely muted, likely to give the Federal Reserve little cause to lift rates soon. On the trade negotiation front, China will pledge to buy $200 billion of U.S. goods over a 2-year period in 4 industries, according to several reports. This includes $75 billion of manufactured goods. In fact, I'll stop right there. That is why because of the tariffs and what's going on with this trade war. This is why I believe that manufacturing sector has been down to the lowest since 2009. And that may turn around very quickly, which could add a pretty big boost to the economy if China actually stands by the word on this. More on that in a moment. $50 billion worth of energy products, $40 billion worth of agricultural products, and $40 billion worth of services. Now, there is the Bill and Melinda Gates Foundation had a deal with China on something that they were going to do, and I forget exactly what it was, but that was stalled over this. Maybe that will continue again, and that could bring some economic development for both nations. The Phase 1 trade deal is expected to be signed Wednesday, that's tomorrow, the 15th, in Washington, D.C. Looking further ahead, gold prices are likely to lose steam this year, with haven demand likely to soften as green shoots begin to emerge across the global economy. Alexander Kuzul-Wright, commodities economist at Capital Economics, wrote in a research note Tuesday. Physical demand in India and China also looks set to ease further as local currency prices remain high, and Capital Economics forecast a small appreciation of the U.S. dollar, which should lower gold demand. That's interesting. We'll see. It's different from what they were saying even a few weeks ago, that they were bullish on gold. And it seems like it's always the case. I think there's something psychological about this. You say when you start to see a couple of sessions of trading to the downside, well, people are Debbie Downers and they're going to predict the price down. You get a couple of sessions of positive trading, it's the other way around. Well, I'm going to do the opposite. Just like George Costanza, maybe things will work out for me if that's the case. But I think gold and silver are going, even in spite of my incorrect prediction over the last day. But the week is still early. It's only Wednesday. But I believe that I think we're going to at least see gold about $1,500. If it does climb below that, it won't be very much below $1,500. Silver, I'm still thinking $17 will probably be the low for the year, but I think it'll probably stay above that. In fact, we might see 18 again soon, but we'll see. It's a little tougher to predict silver, it seems like, these days, but we'll see how it plays out. But I'm overall bullish for both metals by the end of the year compared to the end of last year. Gold will see some support from central bank purchases this year, but that's unexpected to stop gold from falling to $1,400 an ounce by the end of 2020, Kuzul-Wright said. Okay, so there he goes. My thinking is that'll be above where it was at the end of last year. So 1550, just say 1550 or whatever. Maybe it might creep into the $1,400 range for a bit, but I don't think so. That's just, I hope I'm wrong. Actually, I kind of hope it does fall because I like to be able to get some more, but I'm a little bit more bullish on it. We'll see. Elsewhere in the COMEX, and it talks about copper, and then platinum rose 0.5% to $987.30 an ounce after 0.4% loss a day earlier, while March palladium was up 2.42%, gained 2.1% to end at $2,123.30 an ounce, with the precious metal extending a climb to a fresh all-time high. The need for palladium is there right now, and supply can't respond quick enough. R. Michael Jones, chief executive officer of Platinum Group Metals Limited. He told Market Watch, as a result, the price keeps going up. Wow. Very interesting indeed. So there's where things are at. And with this trade deal, we'll see how this plays out. Manufacturing could be affected if China does keep to their word. Then this could be really good news for the economy, and this could cause precious metal prices to fall even further. And they're betting on perhaps that, but I think there's other things that have come up too, and we're not out of the woods yet. And sort of some of these other indicators that could possibly turn the economy in a different direction. Notwithstanding, Donald Trump is going to keep tariffs on China through election day, and through the election to make sure that they are abiding. I think he's holding that out there kind of as a stick at this point because he doesn't trust them, even after a signed agreement. We'll see how that plays out. And that actually has kind of shaken the markets a bit today when that news broke. But nonetheless, we will see how that plays out. That could possibly tamper some things, some economic growth through this time and through the year, which could mean that gold prices could recover or stay up high. We'll see. We'll see where it goes. But by and large, as is always the case, no matter what happens economically, geopolitically, psychologically, we hold gold, we hold silver to protect ourselves in times where the markets are rocked or where there's a currency crisis. And speaking of currency crisis, well, the day's not out yet. I guess there is still some time for the dollar to crash. Some people have predicted today, the 14th, I posted a video about it a little while ago, about this one particular channel, and I think maybe others have kind of asked about it, I think, and they watch these videos, and all it is in the title, January 14th, 2020, the dollar's gonna crash. Russian general says the dollar's gonna crash. This is why, and then it just steals interviews from other channels from actually semi-respected commentators about precious metals or the economy or what have you, and there's no mention of the date in any of the videos. It boggles my mind how videos like that can get literally thousands of views and hold any credibility. And even in the comment section, there's not much talk about calling them out and making that date. I wonder if people even watch it. They just see the title and they just get into the conversation. Regardless, there it is. The ultimate. There's nothing wrong with clickbait to a point. You have a title. I use it to, you want to draw viewers. If you just posted the date and a market analysis or whatever from one date to the next, it's not really going to draw people in. But you have to talk about at least somewhat to some level of what you're referring to and give some reasoning behind or some analysis or what have you. And nonetheless, that is what's going on there. So the dollar is still strong. I've got some of these in my pocket, by the way, these dollars I'm talking about. The dollar is king, folks. It's what we use to buy precious metals. It's what we use to buy the goods and services that we need to survive. And, it's sad that it's only backed by government decree. It's sad that it doesn't have a foundation based off of at least rules, much less precious metals. But nonetheless, we'll keep using it because we have faith in it. All of us, we've got to have faith in the dollar. Or else we wouldn't be able to. But the thing is just because you have faith in the dollar, just because you use it, doesn't mean you can't be scared and shouldn't be concerned about where the dollar is going and how it's being inflated. This is why everyone that watches this channel, or most everybody that watches this channel, that's why we accumulate precious metals to protect us. Because even though we have faith in it for our day-to-day transactions, we have much more faith in the history that gold and silver provide in protecting us. And as money, gold and silver are money. And even though nowadays, especially here in the West, both metals, to some extent, are seen by many more as a commodity or as something of value in a different sense. But make no mistake, both are money, even if they're dormant. And but that's where things stand. And that's where the markets are today. Gold is down. It's suffering loss. But nonetheless, it could go down. It could go down more. But it's never out. Speaking of out, I'm out of here. I'd like to extend a multitude of gratitude to y'all for watching. I post videos on a daily basis, and I would like to encourage you to please rate, share, comment, and subscribe.